Just launching right now. Okay, everyone, what's going on? Happy Thursday. Yeah.
It feels like Friday.
I guess it's a synthetic Friday, right?
Exactly.
It's a synthetic Friday, guys. Yeah, we wanted to do this on Thursday this week just because tomorrow markets are closed, and usually on the last day of trading, we like to do something a little more like podcast style. And we've got a pretty cool topic for this live, everyone. We are going to be talking about betting big, right? Betting big. And the reason we chose this topic for today's live is because we just came off of a huge week where at one point I pretty much was maxed out on margin, like every dollar in the market. And so it seems appropriate to talk about betting big. And Jordan, you said you were watching something yesterday that got you thinking about this as well.
Yeah, I was watching a little poker documentary. It's called Poker the Game for the Kids, or something like that. Really good book. I mean, really good movie on or documentary on, in my opinion, thinking about risk, how to think about risk.
Yeah, Jordan, I feel like risk is one of those things. Like I was even looking at it today. Risk is one of those things that I feel like is just so misunderstood. Like probably one of the most misunderstood concepts in trading. Like I remember it's like risk should be avoided. Right? The common belief about risk is that risk should be avoided. What do you think about that?
I think it's up to depending on the person, right? If depending on your risk tolerance, I think it definitely shouldn't be avoided if you're trying to make something. If you're trying to make something happen, you're trying to push the limits, it can't be avoided, right? It has to actually be embraced, and you have to realize that in order to get to where you want to go, you got to be able to manage that risk and actually put that risk on the table.
Why is that so important?
Well, it's there's in order to make money, you need to take on risk.
Mm-hmm.
You know,
But it's tough, right? Like I hear you say that, and like cool, it makes sense. I think about even things like entrepreneurship, business. Let's say leaving your job to pursue acting, risk. There's a lot of risk there, right? Mm-hmm. But and the reason it's risk is there's a chance it doesn't work, right? There is potential for loss. So, and I think a lot of people are going to hear this talk, and instantly at this point they're going to be thinking to themselves like, what are these guys talking about, right? Like in what world would you ever have all your money in the market?
Well, I mean, we do it quite often. And the higher the edge, the more you want to bet, right? But even then, some people still have huge edges and bet too small. And the benefits of betting big, I think, are tremendous.
So do you think that risk and risk management are directly tied to edge and expected value?
I think it's tied to it's definitely tied to the long run expectancy, right? Where you end up in terms of dollar amount is crucial, right? I think as a retail trader, we're trying to maximize our dollar return, right? We're not trying to make 50% on a $5,000 account, right? We're trying to say, how can I make $100,000 this year? How can I make $500,000 this year, right? You're trying to maximize your dollar returns. Sure, if you're working for a fund and you got $100 million under management, $500 million under management, percent return becomes more important, right? But think about it like when you start working a job, right? Well, and let's say you're young, you're in high school. Well, your return is huge on investment, right? You have $0 in your bank account, and you're going to make $20 an hour. And so I think when your account size is small and you're a retail trader, you want to maximize that dollar return, not focusing on the percentage.
So, okay. Yeah, that makes a lot of sense. But we all know that like 90% of retail traders across the board or of traders lose money, right? Or don't outperform the market. And in options, it's probably even higher, right? It's like, Jesus, it could be pushing 99%. A lot of people lose money in this game.
Yeah.
And a lot of people will look at that and be like, these people have no idea about risk,
Mm-hmm.
right? And to some degree, we might agree with them, right? But it may not be about the risk even. It might be more like expectancy and stuff. But, what would you tell someone to make it clear, like, what you mean by risk and what you mean by betting? Because, we look at these people who maybe have no edge and bet huge and they lose. Even if they win this time, they end up losing in the long run. And how do we differentiate between good betting big and idiotic betting big?
Yeah. So I would first say that the majority of people bet too small, right? You hear it all the time, the 2% rule. Trade small, trade often. I can't deal with this big swing. We hear those things all the time, right? So I think first off, people bet way too small. And then when you do see people betting big, either with an edge or without an edge, they get criticized. Like, this guy bet way too big. He's putting on too much leverage. He's going to blow up eventually, right? And this was in the documentary last night, but in order to get to, there was a bunch of, like, let's say, 20 to 25-year-olds, 27-year-olds, and they were able to make a huge amount of money in a short period of time. And the only way they got there was by betting big. They said, there's no way I would have got here if I haven't bet big. And you see the swings that these guys take, right? Like I was just telling you before the live show, where, this one guy, when they asked him, how much did you lose? He said, I lost $1 million in a day. And that was 50% of my bankroll. Right. And as someone, I guess, who's not familiar with the space or who's not familiar with betting big, you would look at that and you would say, what an idiot, right? How does that guy do that? But it takes a certain person, I think, to be able to bet big and to really reap those rewards. Of course, you got to have an edge, and you got to be able to say, when am I in a losing spot, right? That also takes a lot of skill to say, you know what, I'm actually not good enough to play this right now. Or I'm not good enough to play this person. I'm not good enough to play in this field. And you need to take a step back and, build out your strategy again. But it's important to be betting bigger.
So when you say betting bigger, I want to ask you two things here. Number one, I want to ask you about what does it take to be the person who could bet big? But before we get right into that, oh shoot, I totally forgot the second one. Okay, let's go with that one. I'll come back.
Sorry, you had me distracted there. It was
now you forgot it. Now we both forgot all the question. What a life.
Okay, what does it take for someone to be able to bet big?
Yeah.
Okay. We both haven't had our coffee, I guess, this morning.
We haven't had our coffees today, guys.
So what it takes to bet big, it takes someone to be detached from the money, where it's you're going to be a little desensitized to money. But it also takes someone who just wants to win, like really, really wants to win and understands that, hey, look, if I blow up, I'm going to try my best to find an edge and bet optimally, right? And optimally is usually betting big. I mean, when you look at the Kelly criterion, sometimes you say, how the hell am I supposed to bet this big, right? Given a certain edge. And, I think it takes a person to say, okay, I want to win at this game so much that I'm actually willing to, let's say, have the risk of potential blow up or put the risk of a huge drawdown, right? If you're not going to have that big drawdown, I'm not saying like you have to take the drawdown, but it's just going to be in the cards. If you're going to be betting big, a potential large drawdown is going to be in the cards. I think the person you need to be to embrace that is just someone who is just really wants to win, is desensitized to money, and realizes that worst case scenario, you can get a job, dare I say the name, right? Worst case scenario, you take your shot at the game, play it like it should be played. And if it doesn't work out, you got the job.
So we got a couple comments here in the chat that I think are worth going over. One is that, I never had the confidence to bet big because I'm not sure what I'm doing. What do you think?
Well, you should definitely not bet big. You definitely don't bet big. If you don't know you have an edge, you should 100% should not be betting big.
So let's build on that though for a second. And then Alex, thanks for your comment as well. We'll get to that too. And if anyone else has questions or comments about this discussion, this is a pretty open forum here. Just drop them in the chat. You know how one of the characteristics of gambling is perceived skill? How do you know if you just have perceived skill or real skill? Because I think being able to differentiate between the two and build that confidence in what you're actually doing, can help someone who is feeling that sort of bet paralysis.
Yeah, well, you definitely don't come into the game betting big, right? And I think that's like when I said bet big, I was talking to, let's say, traders who actually have positive expectancy. Someone like Margin, for example, who has a positive expectancy and can really gear up by betting bigger. That was really who I was talking to.
Like Hutch, these guys.
Like exactly, like the guys that are actually have positive expectancy and and need that extra take on extra risk to make some money, to make some real money. In terms of not knowing, like you start off small, right? Just like if you think about it in a poker game, you start off small. You start in the small stakes where it's not meaningful if you lose $100, right, or $1,000. But as you bet more and more and more, you start to work on strategies and you start to understand the game, right, and understand your expectancy. Well, now you need to start leveraging up. You need to go to the next stake, right? And you just keep on building and building and building until you're at a point where your trades are huge, right? And your expectancy is well known. I mean, it's not usually always well known. It's actually pretty hard to figure out what your real edge is. But your P&L, the ideas, the philosophy, and I guess crunching all those numbers should give you some indication of, are you betting with a positive expectancy? And when you have that and you really understand that and you really understand your edge, you need to start putting the chips on the table.
So let's build on that one more level. We bet big this week. Mm-hmm. What did it take for us to bet big this week, man?
It took a lot of
let's talk about the trade a bit too.
Yeah, so we basically short the whole basket of those Chinese names that blew up: Diska, GSX, TME, Viac. So we were short those in size. And in order for us to really put on the size, we needed a few things. We needed, one, to understand what the trade was. Well, why were we taking this trade? Well, we had a blow up, right? We had a guy getting liquidated, and vols went through the roof. We had to figure out what fair value was for these trades, right? So, for example, I'm in GSX right now with size, and I have fair value at 90 vol. Okay, so we have to price them. Then we need to say, okay, if we're wrong, how much are we going to lose here, right? What's our risk if we're wrong? And in this case, it was a great risk reward trade because it's short vol. It's a linear trade almost. Well, we're short Vega, sorry, not short vol, not short gamma. Short Vega, linear trade, and our risk not that high, especially when you're selling at 125 IVol for a 1 year option. And so those are the three things that we really need to understand: where we write, our risk, and then understanding the trade, and then sizing it up and betting and saying, listen, this is what we think is going to happen. We're not always going to be right, but we're okay with this loss when we do lose, whatever it is, 50,000, 100,000, whatever it is. And, if we're right, we're going to make a ton of money. And so now we play our hand, and that's really it. But if we went in there with only a couple lots, all that work, all that, thinking about the trade and understanding the trade and stressing it out, all that time spent for a couple, for a couple bucks, it's not worth it. It's not worth it.
Awesome. Okay, let's move on to the next question here. So Alex was making a comment. He said, "You guys are forgetting the worst thing that's going to bite you in your ass in the market: emotions. When you talk about betting big, the stakes are high, thus higher emotions."
Awesome. That's a really good point. I actually almost forgot about bringing that point up. So Alex, thanks for bringing that up, buddy. Maybe we should post it. Maybe we should post a link to this video somewhere, Sean. If you're not getting frustrated, if a loss isn't meaningful to you, you probably didn't bet big enough, right? You probably didn't bet big enough. Think about this, guys. When we hear the stories, right? When we hear the stories of these successful traders, these successful poker players, and you talk to them and there's interviews with them, you hear the stories of the guy throwing his computer out the window, or throwing a chair across the room, or maybe there was a fight on the trading desk, whatever it is. We hear these stories, right? These stories of frustration, these stories of putting in all the effort, betting big, and then getting unlucky. In trading, and just like in poker too, it's a game of skill and a game of chance, right? Every single trade we do, it's not 100% guaranteed. If I have pocket aces and Sean has pocket kings and we go all in, I have to get all my chips in. But there is I think it's like an 8% chance that Sean gets a king and I don't get an ace and he hits a 3 of a kind, right? There is that chance. And that's so frustrating, right? Imagine this. You, let's say, spend 5 years grinding up your bankroll. And now you're in the biggest game of your career. And you have pocket aces and Sean has pocket kings. How do you not bet all in? Right? How do you not do that? You have to embrace that variance. And that, it's unlikely, it's unlucky, it's super unlucky if you lose that hand, but there is a chance. And so that emotion that you should have from taking that bet, both on the upswing and on the downswing, should be huge. Right? But you just do it, you lose money and make money so often that you sort of start to become desensitized. Right? You're not just I see my friends sometimes where something happens to them and it's like they're going to lose $300 or something, and for us it's the commissions going into a trade. Right? I think you start to become desensitized, and I think that's part of the game.
Alex, if you have a follow-up to that, feel free to drop it in the chat, man. Jenny had a question here. It's a little pivot here. Can we talk about trading with margin and selling naked options if you have a small account?
Yeah, we can chat about that.
It's a little off topic right now, but
I'm trying to think
too, right? Like, so this is sort of what, this is the situation that I had with the small account challenge.
Yeah. Okay. So maybe we I remember when I had a smaller account size, I told a guy who was a really successful trader, retired now, and who's he said, "Hey, dude, if you lose this, you can just make this up in a job, right? You can just make this up in a month of work, or 5 months of work. But when you're betting, let's say a huge capital size, losing, let's say $500,000, you can't just go and make that in a job, right? So when you're trading on a smaller account size, you're probably going to be betting bigger in terms of how much you're betting in terms of your capital. So yeah, I mean, I'd say Jenny, right?
Yeah.
Bet big, right? Bet big. Your account size is small. You can make up that money through working a job, as long as you have a positive expectancy. If you don't have a positive expectancy, or you don't know, you shouldn't be betting big. Right? Step back, focus on research, focus on trying to build that expectancy, that positive expectancy.
Awesome. So Mike is asking, I'm finding that having a defined entry exit plan makes it easier to take emotions out. Trading just becomes number crunching. Do you do this? How would you determine what your entry and exit points are?
Yeah. No, dude, I think that's great. I think that's great. Aaron Brown says, like, if you're a trader, if you tell me you're a trader and you haven't thought of when you're wrong in a trade, you're not a trader. So having those two key factors, right? When am I right? Right? AKA, well, what do you think fair value is? And when am I wrong? Right? And once you have those two, you stick in the trade. But sometimes you can be in these trades where it's like 80% chance you're gonna make money. And if you do win, you're gonna make a lot of money. But then that 20% happens and you lose quite a bit, right? And that's so frustrating. But it should be meaningful, where it's like, it's upsetting, right? It's a little upsetting. I feel like I wasn't like aggressive enough. I should have threw my computer across the room here. But cool. I agree with that.
Guys. Yeah, that was a pretty good chat, Jordan.
Yeah.
With the markets closed tomorrow and everything, you're gonna be taking it easy over the next few days? Plan.
Yeah, for sure. Just do some research. How are you?
Hang loose, man. Swati's got a question here.
Hey,
how do you backtest and estimate your expected value for a strategy?
Yeah, so there's two. In my opinion, there's really two ways. One way is just knowing what something is actually worth. For example, if Apple's cash balance is, let's say, $100 billion and the company is trading for $50 billion, well, it's worth $100 billion and you can buy it for $50 billion, right? So, you're not going to see that often, but things like that, right? So when you actually know what something's worth and you can price it, you don't need to back test for that.
Or if Coca-Cola is trading at 40 IVOL, Pepsi's trading at 30 IVOL, something's up here probably.
Yeah. Right. So those are ones where you can just price. You don't need to back test. It's just inefficiency. In terms of back testing, and finding out your expectancy, what we usually do is we do a couple of things, right? So one thing is we test, and I'm sure you're familiar with this. You test on a certain sample, and then you train on a certain sample, and then test it on another sample. And you actually, it's called walk forward analysis, where we actually just keep shifting the data. So let's say our data is like this big. We test, we train, test. Then we move forward a bit, train, test. So you can do something like that. You can also use Kolmogorov smoothing. I think that's what it is. What it's called, where you basically you're going to grab the distribution from each. You're going to basically take your data, chunk it up, and then you're going to say, okay, well, what was the distribution of returns here and here and here and here and here? And then when you start actually trading it, right? When you start trading it, if you see a distribution that's way different than these distributions, well, maybe something's wrong, something's up, or maybe it doesn't work anymore. So there's a lot of different techniques you can use to actually see if you have a positive expectancy in terms of back testing. That's for a whole new topic.
Okay. So with that being said, we're probably going to wrap up the stream here, Jordan. What do you think?
Mm-hmm. Let's do it.
I think that was enough to chew on for 1 week, That was good stuff. Okay, we got one more question. We'll take it. It's a good one. So Alex, thanks for the question. In terms of percent of account, what would constitute betting big, in your opinion?
Yeah. So it all depends on the edge, right? If I can buy gold in Mexico and sell gold in the US for two different prices, I'm putting all my account on. I'm putting my whole account size. If you have a pure arbitrage or a quasi arb, you got to put on the whole size, right? You got to borrow sometimes if you have to. As the edge diminishes, you put on less and less size, or as the risk increases, you put on less and less size. So it really depends. There's definitely no one set rule.
You're basically trying to optimize your bet size for your expected value to squeeze every drop of value you can out of it.
On the, just to give you a quick example, I have a GSX trade on right now, and if I'm wrong on that trade, I'll lose 10% of my account. But it should be, it should be a little bit bigger. But that's something, yeah.
Mike is saying, that's basically like Kelly criterion is what you're saying.
Yeah, exactly. Right. The bigger the edge, the more you bet. The less the edge, the less you bet.
Yeah. And it's a little, full disclosure, you don't want to use exactly like Kelly betting in trading because it's not a binary situation.
Yeah. And there's some versions of it that really help you get like really applicable to trading.
Mm-hmm. So Alex, for example, there's an earnings strategy that we talk about at Predicting Alpha all the time. And, given the nature of that strategy and the edge involved in that strategy, you're betting 1 to 3% of your account on a trade. Max risk, right? Stressed max risk at like 1% of your account if you're really big. You know what I mean? So, and that would be considered betting big on the strategy. Versus if you were going in there betting 0.1% of your account on each trade, you'd be betting too small. Because given the edge of the strategy, you should be betting bigger. I want to just point out one last thing here. Like, whenever we sit down, like we have these sort of, chats, Jordan, it's like, it just feels very different than, a lot of the conversation I hear online and stuff. Like it's a real trade. You are buying something from someone else that you think is mispriced or something like that. You're engaged in this market. You know what I mean? It just gives me such a different feeling. It feels like a real job.
Well, it is a real job.
You know what I mean? Like
it's a real career.
Versus what I see online a lot of the times, right? Where it's like, it can't shake the gambling feeling, You
can't shake the game.
Like, a lot of what I'm seeing online, I can't shake the feeling that it's gambling, like, and of course I know, but it's like, these conversations are refreshing, they remind me, it's like, it just has such a different feel to it.
Yeah. I mean, a lot of people don't have an edge, right? And that's just the nature of the game. As new edges come, people exploit them, they disappear. And so, most people don't have an edge, and they don't really know what's going on. So, of course, you're going to go on those forums and see those see a lot of monkeys running around.
All right. So with that being said, everyone, we're going to wrap up the stream here. PA guys and girls, we will see you in the chat now, pretty much. For everyone else, thanks for tuning in. I hope you got a lot of value out of it. We'll be back at this on maybe Monday, maybe Tuesday. I'll post an update on YouTube and on Instagram, letting you guys know. But if you have any questions, you can shoot me an email to Sean@predictingalpha.com. Always happy to chat. Take it easy, everyone. Enjoy the long weekend.
See you guys. Happy Easter. Woo!